The Reserve Bank meets tomorrow, and while 0.25% rate rise is seen as a foregone conclusion, speculation is now mounting as to whether it will raise by 0.5%. Business Editor Ross Greenwood is with me now. Ross, which way do you think the board will move?
Look, I get a sense, Kieran, that they'll go for 0.25%, but, anything's up for grabs here because last month there was universal expectation the Reserve Bank would raise rates by 0.5%, and they only went by 0.25%, effectively opening it up for a lot of people to say, hey, maybe these rate rises are coming to an end. You saw auction clearance rates rise. So this is the market speculation about a 0.5% rate rise tomorrow. You can see that before the inflation numbers came out last week, came in at 7.3%, of course, much higher than expected. There was a 45% chance the markets were putting at a rate rise of 0.5%. Well, over the weekend and today, that's now more than 50% chance of a rate rise. So the expectations broadly are that it'll still be 0.25%. But the second thing that came out today, which adds a little bit of anecdotal evidence about the need for these rate rises, was retail sales. So for the 9th month straight, here they are here, you've got retail sales at record levels in Australia. They're up by 0.6%, and this is largely driven by food retailing. So it was not only food retailing, but it was takeaways, cafes, restaurants where people are consuming. There was also a big rebound in clothing and footwear here as well, and in department stores. So, these are discretionary spending items in many cases. It does show that people are absorbing some of the inflationary impacts of rising prices. But one of the things that the Reserve Bank is keen to do is to get that demand to drop off a bit so that there are fewer inflationary pressures out there in our economy.
Clearly, the RBA is concerned about the inflation trends and the prospect, Ross, of higher energy prices, which we've been discussing since budget day. What options does the government have to fix this short term?
It looks like the real option is for them to have some sort of a gas trigger, which is mandatory and not a voluntary code against the big gas producers, so that the uncontracted gas that is not, going overseas, that it really be put back into the Australian market. And the market right now is talking about somewhere between $10 and $11 per petajoule. Now, the interesting part about this is really about trying to make certain, A, that there's plentiful supply for the Australian market, and B, that prices don't take off. Otherwise, it's not just the inflationary impact and therefore higher interest rates, it's the lack of competitiveness of Australian business that's the absolute key, that could lead to higher unemployment. And so really the government would be very much aware about this, and you get a sense that the day is coming closer when the government will act and probably take similar action to that I described.